Hey guys, Isaac Moore here with morehomes.com out of Boca Raton, Florida. I'm a full-time real estate agent, and today we're going to be talking to Chad Reidlinger out of Resolution Home Loans. He is a mortgage guy. Actually, he's our mortgage guy, our preferred lender, and let's dive right in. So Chad, tell us a little more about your company, how you guys started, and some of your company's strength, and just tell us so people get to know who they're working with.
Perfect. I appreciate it. So my name is Chad Reidlinger. We're with Resolution Home Loans, like Isaac said. And we're a direct lender. So we work out of Sunrise, Florida here. So we're local. Everything we do is under one roof. And we're shooting out of here today. And so we have underwriting, processing, closing. Everyone works right here in our office. So I've been doing mortgages for about 18 years. And got into the mortgage business in 2000, and we started here with so Resolution Home Loans is my team. It's my branch. We work for our parent company, which is Hamilton Group Funding, and been with them for about 6 years now. Okay. And so we chose Hamilton Group Funding just because of the local feel, and they're not a super large lender. So we do about $1 billion a year in mortgage origination. So I like that small to mid-size because our team, we do about $100 million a year in business. So on average, we close about 450 transactions a year with my team. And I like the smaller to mid company feel because your voice matters with them.
Right.
And my first 10 years in the mortgage business, I worked for very large banks. And I worked for 9 years with Bank of America and 1.5 years with PNC Bank. And with the banks, it was a very us versus them mentality. So it was like sales versus operations, and just couldn't really get anything pushed through in a timely fashion. And when you work for a direct lender, everyone's on the same team. Everyone's moving the ball in the same direction down the field.
Right.
And
Tell us a little more about direct lender. What is a direct lender compared to a mortgage broker?
Great. It's a great question. So really, there's 3 different types, right? You have your mortgage broker, you have a direct lender, and then you have a bank. So the primary difference between a direct lender and a mortgage broker is the direct lender can control the process from start to finish, because everything happens within the 4 walls of that direct lender. Whereas a broker, they'll shop your loan around the same way we do. So we have all different investors that we can sell the loans to, the same as a broker can. But we underwrite here and we fund here. The broker, they'll shop around, they'll find the lender that's going to offer the best price.
More like auction it.
Correct. Yeah, they're going to go and see, okay, who can give me for this specific transaction, who can give me what we're looking for.
Right.
And but what happens is once you find that place you're going to send it to, you send it off to that lender, and they underwrite it, and they close it. So what I have found is when you're brokering, like you're kind of a number to them.
Yes.
Because now all of a sudden, you're sending this to them, and now you're at the mercy of what's the service level agreement. Okay, we underwrite loans in 72 hours. It's first in, first out. Whereas here, I have 2 of my own underwriters that are assigned specifically to my team, and we control that workflow. So if I have a file you send us and it has to close in 8 days, I don't have to wait that 72-hour turn time. I say this loan needs to be underwritten next. Take this file and run with it because it has to close in 8 days, and I don't have to worry about what place are we in line.
Now, can you explain a little more? I think a lot of people are wondering, close in 8 days. How is that even possible? So just so you guys know, Resolution Homes can actually guarantee that you can close within 15 days. Tell us a little more, what does it mean close within 15 days?
So we have a 15-day closing guarantee, and the reason we can offer that when most lenders are telling you it's 30 to 45 days to close is because we underwrite our pre-approvals up front. So most lenders don't do this. Most times when people get pre-approved, they're getting pre-approved by the loan officer. They're sending in their documentation, and the loan officer is looking at everything and saying, okay, you're good to go. You can purchase a home up to $250,000. The issue with that is, for as good a job as we try to do as loan officers, we miss stuff, right? And we're human beings. So, and really the loan officer is not the one at the end of the day that's going to issue the full approval. It's the underwriter who reviews it and gives you the final approval. So what we do is we kind of move the underwriting process, which normally is happening 10 to 15 days into your contract, and we move it up to the pre-approval process. So we're fully underwriting every loan up front during the pre-approval phase so that when the buyer actually goes out and looks for a home, they're done. Like all they need to do is get us 3 pieces of information and they can close. They have to get an appraisal, they have to get title, and they have to get insurance. Once those 3 things are accomplished, they're closing.
That's amazing, guys.
That
really is.
Here's the real big difference, though. In this market, and actually I was just reading an article from the National Association of Realtors that pending home sales has decreased 5 months in a row straight. Every month, the pending home sales are getting harder and harder because the buyers are out there, but the inventory is not.
Right.
And so what we try to do here at Resolution Home Loans is try to get the buyer the best opportunity that when they go out and find the home they want, we give them the best chance to get their offer accepted. So when you're doing your job out there, usually the listing agent's going to accept the highest and best offer.
Right.
So I can't really help them with the highest. That's your job, right? You work with the buyer to.
But the best.
But the best is you look at everything, right? And a big part of that is financing terms, right? How quickly can you provide a loan commitment? How quickly can you close? And when you submit an offer to a listing agent with a 15-day closing time period on there,
agreed.
The listing agent's gonna catch their attention and it's gonna catch the seller's attention. And our job is to make sure that we get every offer we can approved so that buyers don't miss out on homes and that you can get them to the closing table.
Now, what else would make a candidate that comes to your office, starts the process, what makes them a strong candidate? Meaning, okay, I'm working with someone that is going to be pretty solid case of closing once you present an offer, and what makes a candidate strong? Is it credit rapport? Is it how much money they make? Tell us a little more.
First and foremost, what makes a candidate a good candidate for us, at least, is somebody who is forthcoming and who works with us and who doesn't fight us every step of the way. And if we ask for certain documentation, like we're only asking for something that we absolutely need. We don't want to ask for more than what's needed, but we are very diligent up front to make sure that we don't miss anything. Because the last thing we want is for some of those mortgage horror stories that people hear about, when their stuff's in a moving truck and now you're not funding. So that doesn't happen here. And because we do our due diligence up front. So predominantly we're going to look at 3 main things: credit, income, and assets. That's really the bar, that measures the borrower's ability to repay the loan. And in the past, like 2007, 2008, if you had one of those 3 things, you could get a mortgage.
Exactly.
Fast forward 2018, you really need to have your credit in line, your income in line, and your assets in line. So that makes a strong borrower if you have those things. But I think a lot of buyers get intimidated because their credit might not be, A+ credit, right, or they might not have a large down payment. That's okay. We work with buyers with in the 500s with the credit scores. We work with buyers one day out of foreclosure and one day out of bankruptcy, one day out of short sale. So there's moving parts depending on, if you have a strong down payment, you don't need to have real strong credit.
Right.
If you're a self-employed borrower and you don't show a lot of income, there's bank statement programs out there for them. So we've come a long way since 2008, the crash, and where everybody needed real strong credit, real strong income, and real strong assets, and we've definitely seen some laxing in the guidelines over the past 10 years. So it's definitely shifted back into the borrower's favor as far as some loosening of guidelines.
All right. So that covers what is a strong candidate, but a lot of people are asking me whether they're buying or selling a home. When I sell a home, usually I like to use my lender to pre-approve the buyers when I get an offer, just to make sure that it's going to be a strong case before I present it to the seller. So I would call the lender and ask them, hey, what do you think about that buyer? How strong are they? And that's something that Chad can help me, right, not only directly with their lender, but also just to double check. And that's an added value that Resolution Home can offer us as a realtors. But Chad, tell us a little more. A lot of people are asking me, how do I know if it's a good lender? How do I know that he's going to be able to help me to close the deal? What should I look at? What should I ask?
I think, well, first and foremost, I think that you should look at the reviews online. I strongly suggest you Google, right? So you Google the company that you're talking with and Google their reviews. Google the loan officer that you're working with. Like in today's day of Amazon, right? You buy everything online, and people will research the reviews on a $10 item on Amazon, and but they won't research the reviews on a lender that is going to support them in the biggest purchase they're ever going to make in their life. So, a lot of times people, they find these online lenders, and it's like, look, your earnest money deposit, which can be thousands of dollars, could be at risk if you miss the time frames and the dates in the contract. You're putting your hard-earned money, your hard-saved money, at risk, and the closing date. So not only are you at the potential of losing your money, but you're at the potential of losing your dream home.
Yes.
If you don't work with a lender that can come through on these time frames that you're agreeing to in the contract.
And really be on top of their game.
I think the first and foremost thing is just research. Like look online, Google us, Google Resolution Home Loans, and see what you find. We have over 300 reviews online from realtors and from clients that have used us, and we work really hard to get there. But not every lender has those types of reviews, and so just know who you're working with, and don't take my word for it. And I know sometimes your realtor refers, and a lot of people take the realtor's word for it. But look, do your due diligence and just Google and see what other people say.
Exactly. And let's change a little. Let's shift a little bit and talk about the market. So, as we know, inventory is low these days.
Right.
A lot of people have bought homes, and inventory is low, prices are high.
Correct.
And then interest rates are also going higher.
They're creeping up. Yep.
So give us a little insight about first of all, what are the interest rates right now? What are we looking at? And what is your prediction that it's going to do in the next 6 months or at the end of the year?
So that's a great question. So right now, I would agree with you that the inventory is very low. You got a lot of people, you got a lot of buyers out there that just don't have homes to buy. So everyone's fighting over the same properties, and you're seeing multiple offers still. The interest rates have been creeping up. So, if you're a buyer and you're sitting on the fence, it's costing you money as you wait, unfortunately, because you got the home prices continue to go up. You got the interest rates continuing to go up. So what's happening there is, if you have a budget, say your budget's $2,800 a month on a home, that budget's getting you less and less as time goes by, because as interest rates rise, that the interest rates affect your monthly payment. And so your payments are going up, and your debt to income ratios are going up, and so the affordability of the home is going down. Right. So what I tell people is just, when you're going out there and you're actively searching in this market right now, there's buyers markets and there's sellers markets. Right now it's a seller's market. So you have to be, if you find the home that you want to be your home, you got to go in with a strong offer. Right. You can't go in and lowball and expect that you're going to get the property, because properties that are priced decently and that are in decent shape or better, and I can't tell you, going off the market.
I can't tell you how many listings I've had that I closed more than asking price because of the competition, because of the low inventory, because of how hard it is to be approved.
If you're a seller in this market, it's fantastic.
It's fantastic.
If you're a buyer in this market, it's just hard to get your offer accepted. So you got to go in with with a strong offer based on what the comparables are, and obviously you'll help them with that. But then also with the financing terms, another important thing. Just make sure that you have your ducks in a row. Don't go out looking on the weekend prior to getting pre-approved. You find the home you want, and now all of a sudden it takes you 4 or 5 days to get pre-approved because you're trying to get your documentation together. By the time you do that, the home is gone. Mm-hmm. And so now you missed out on a home. So what we try to do is we try to avoid buyers going through a bad experience in order to learn, so that the next home they find that they like, they can actually learn from their mistakes. And so I know that you probably try to do the same thing where we try to educate them ahead of time.
Right.
But sometimes, just like in dating, you got to learn the hard way sometimes, right? So your friends could tell you, hey, like, don't date that person, but you're like, oh no, they're fine.
Do you find that these days you find a lot of buyers that because home prices are going up and interest rates are going up, do you find there's a lot of people that are coming to you and be like, hey, Chad, I need to buy now, because I find it all the time, because I'm afraid that interests are going up too fast and prices are going up too fast and everything is just too fast for them. So how do you handle those people that they want to make a move now, but they didn't think about buying a home up until now, but now all of a sudden they want to buy a house?
Right. We see a lot of that. We see the people that feel like they feel the pressure, because they see what's happening with the home prices and they see what's happening with the interest rates rising, and so they're kind of rushing into the process. But what I just try to do is I think the biggest thing we can do on our end is just educate them. Right. And so the more we're able to educate the buyers and we're able to go through with them and make sure they understand what their cash to close is, they understand what the monthly payment's going to be. Where I see buyers get into trouble is where they're not fully educated by their lender, and then they go out and put an offer on a property, and then all of a sudden they come back and I didn't know the payment was going to be that high. That's out of our price range. Right. Or I didn't know I was going to need, they come into it thinking, okay, I can put 5% down or 3% down, but hey, there's closing costs.
Right, they don't take into consideration closing costs,
expenses, and taxes and insurance, and so then all of a sudden it's a big surprise.
Yeah.
So I just think it's talking to the right lender up front so that they can get all their questions answered and educated so that there are no surprises. Because I think that's where people get spooked a little bit and then they get in trouble is making sure that they're just everything's being disclosed up front, and they're working with somebody who's going to be able to deliver what they're promising.
Great. And one last question. What would be your best advice to millennials?
I think the best advice I can give to millennials is to understand the value of homeownership. So millennials, I see they're waiting a little bit longer to purchase than other generations before. I feel like years ago it was like, okay, you go and you get married and you get the house, right? And what I'm finding is that the millennials they're spending a little bit more time and money doing experiences and traveling and doing all that stuff. But where I feel like they're missing out is homeownership gives you a lot of perks financially and towards retirement. And unfortunately, I see a lot of people's financial situations, and a lot of them aren't contributing as aggressively as they should into their 401k. And what I'm seeing is for a lot of people, their home is their only real retirement plan, which is not something that I would recommend, but it is it does help to have that equity. So when you buy a home, there's three things working in your favor as a millennial. You have the principal. You're paying down the principal as you make your payments, so you're building equity in the home. Right. You also have appreciation on the home, right? And then thirdly, you also have the tax benefit. So there's three big benefits that you're gaining when you own a home that you don't have when you're renting.
Exactly. And
we happen to live in a market here in South Florida where a lot of times you can buy with a payment that's either equal or less than what you're renting for.
What you're renting for.
Like I was in New York recently, and my cousin lives in Manhattan, and she's paying like $2,800 a month in rent for like a one bedroom. But if she were to buy that same one bedroom, it was like $1.3 million. So you buy that $1.3 million, you're going to have a payment that's $7,000-8,000 a month, and she could rent it for $2,800.
Yeah.
Down here it's the opposite. So you're paying $3,000-4,000 for a four-bedroom single-family home rental. And then you can buy that home for the same payment or less.
Right.
So there's that benefit, and there's also a lot of first-time home buyer incentives out there that are available to either help them with down payment assistance that millennials can take advantage of, or to help them with different tax incentives that are out there as well. So we work with all different types of first-time home buyers for millennials, and if there's any programs that are out there that can help incentivize them, to get the best deal possible, we'll help them do that as well.
This is great information. Guys, thank you so much for watching. On our next videos, what we are going to be talking about is number one, different types of loans, conventional, FHA, VA. There's a lot of different programs that we can be looking at. And the other thing, one of our next videos is going to be is actually the home buying process. What does it take? What is step number one? And where do you see the end? It could be what documents are necessary. There's going to be a lot of things to discover with Chad. I think the information we got today is absolutely crucial and really, really informative. And I'm looking forward for our next video.
Me too.
Thank you guys for watching. Our names are going to be shown below. I'm Isaac Moore out of morhomes.com at Boca Raton, Florida. Chad Reidlinger out of Resolution Homes. You can call this number below. Let us know if you need any help. We are here to help you and get you the home buying process as easy and smooth as possible. Have a great day, guys, and thanks for watching.
Thanks a lot.